When you can actually see your profit for the year in dollars and cents, it gets you more in the notion of selling corn, knowing that I can lock in a $50,000 profit or whatever the profit is. You want to lock it in. If I know I can make that much profit in a year, I will be in business next year.
Good afternoon, welcome to GrainTV. My name's Cody Bills. Today is Monday the 28th. Logan will not be joining us here today. Markets were moving higher here except for wheat, which was trading down 3 1/4 cents on the September contract and 2 cents lower here for the December contract. When you look at corn for September, trading up 4 3/4 cents. Soybeans here trading up 24 1/4 cents on the old crop contract, which is August. Keep in mind, folks, that it is going to be first notice day on the 31st, Thursday, for that contract. So if you haven't rolled yet, now is a good time to do so. Take a look at September, trading up 23 1/4, and November contract up 24 1/4 cents here this morning. What's driving soybeans higher? I think one of the factors here is that we did have nice export sales this morning coming in. They were reportable sales of 486,000 metric tons of new crop soybeans going to China. Now keep in mind that last Thursday we did have export sales in the export sales report that beat analyst expectations by over 1 million metric tons. I think the fact that we're getting some sales here for new crop is supportive, especially with prices having come off as much as they have here in the last couple months. Another thing to keep in mind here is that there was talk about state news agency out of China announcing that some provinces that account for growing soybeans and barley was actually experiencing drought, and this could be another driving factor for those new crop purchases that we've seen recently. I think that is one of those things that may not necessarily fundamentally cause an enormous bull rally in the market, considering the amount of supply that we expect to come onto the scene here come harvest, but it certainly makes those holding short positions perhaps a little bit nervous and could cause a little bit of a short covering rally. We'll be paying close attention to any developments on that piece of news coming out. We did have crop conditions come out here later today. We'll get to those. We also had export sales inspections this morning. What we saw here is corn coming in below analyst expectations at 805,000 metric tons exported or inspected for export. For soybeans, we saw 112,000 metric tons, beating analyst expectations of 50 to 100,000 metric tons. And for wheat, we came in just shy of the low side of analyst expectations at 395,000 metric tons. Let's just talk a little bit about soybeans here, as we have a few people call in today wondering what's going on in beans and why it's rallying. I drew this chart. It is an hourly chart, so each bar is representing 1 hour worth of price activity. You'll notice that back here we do have a gap. It was between July 3rd and then, of course, the 4th we had off, and we came back on the 7th. When we came back on the 7th, the market had gapped lower here, and we haven't yet filled that gap. So I think that that might be a price target if you're looking to make some sales here and you're not sure where. I think that that may be worthwhile to put a limit order up there right on this kind of 1134 area to see if you can get filled there at that gap. I wouldn't be surprised if we do have resistance up there, if we are able to continue to retrace some of this big bearish move lower. Notice that on the 16th and also on the 24th here, we touched on this 1107 mark. Both times once we touched it, we sold off sharply. You'll notice that we sold off sharply this last time. Well, we got up to it and we closed right around next to it. I think that this is going to be a bit of a bullish move here. I think that today's price action followed with strong export sales down around these price levels for new crop, as well as this story here about dryness and drought in China. I think that this could be enough to get us a little bit of a bounce and move up toward this gap to potentially fill. So that's kind of my take on soybeans right now. We'll have to see how the morning and the overnight session pans out. One thing to keep in mind, 2 o'clock Mountain Time and of course 3 o'clock Central Time, we did get crop conditions come out here. It was a little bit of a surprise. Analysts weren't expecting any kind of change here from last week, but we did get corn conditions revised 1% lower for the good till excellent category, and soybeans was revised 2% points lower here for good to excellent. I think that's going to catch the market a little bit by surprise as well, and could offer some supportive pressure here for this little bit of a rally that we saw for soybeans, and at least the strength a little bit that we saw here for corn. When you look at the progress here in the crop, corn silking at 78% here compared to 56% last week, and beans blooming at 76%. Actually, this 19% accidentally here, that was for pod setting last week, so we cannot compare that to the 76% blooming that you see under this July 27th. Other than that, guys, if you have any questions about what we talked about today, give us a call at 877-472-4607. Do keep in mind when we look at the weather outlook here that it is going to be cooler this week. We actually may see some lows in that kind of southern Minnesota and southeastern part of North Dakota down in the mid 50s to high 50s. So if you have any tomato plants, make sure you take them inside. Other than that, guys, it is going to be cooler. This does usher in some concern about growing degree days. You know, we may talk a little bit about frost freeze threats later on down the road if growing degree days continues to be a concern. But one thing to keep in mind, actually, as we talk more and more about the grain transportation problems in North Dakota, is that growing degree days could play a very large role there. If we have a crop where we pull it out of the fields and it's a lot wetter, there may be a lot more hesitation about piling grain in North Dakota, and the fact that rail situation is still very uncertain, that may be just too much risk. I think the bottom line here is that storage in North Dakota is going to be a very critical and very important part of a marketing strategy, and if you can't pile it, we may see basis depressed there come new crop. We'll talk more and more about that as we move throughout the next month. We're doing kind of an in-depth study here on transportation, and we're going to do our best to provide that information to Grain Hedge subscribers. So thanks a lot for tuning in. If you have any questions about what we talked about today, give us a call, 877-472-4607. Remember to take a demo at our Grain Hedge site. You can use the mobile trading platform and the desktop trading platform and get live quotes right on your phone. Thanks a lot for tuning in. We'll see you here tomorrow.